It's like you could say the same thing about gold, right? I mean, what do the central banks see that your average retail investor that buys ETFs doesn't see? Because that's what we're seeing, right? We're seeing central banks continue to buy gold and keeping the gold price above $2,000 while your generalist investor continues to buy wildly overvalued stocks.
You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. You are listening to watching the Financial Survival Network. I'm your host, Kerry Lutz. We're the third week of January here, and well, gold staying up over 2,000, so you got to give it some credit there, but silver not so good. The mining share is definitely not so good, but let's talk with the head of a junior miner junkie, David Erfle. David, it's great to have you back on. So, hey, insane times we're living through here, huh?
Yes. Hey, great to see you, Kerry. Thanks for having me on again. Yeah, really crazy times. The stock market keeps going higher. The silver price and the gold miners continue to lead the gold price lower after the gold price made a monthly, quarterly, yearly all-time high. But that elusive $2,100 level, which is where we need that monthly close above before we can really get excited, has yet to take place, while the stock market continues to go higher and zaps any enthusiasm whatsoever out of, even if you're considering getting into miners, which is really a good thing if you're playing the long game here and accumulating shares, because you're able to take your time and focus and focus on the best of the best, and you don't have to worry about the rest, and continue to accumulate and wait for that flip of the switch, which we know is coming. The Fed basically has caved on inflation, right? I mean, toward the end of the year, last year, the last Fed meeting in the middle of December, they basically caved. They issued a roadmap for rate cuts while inflation is still twice as high as their 2% target.
Yeah,
so
at least.
And then they come out and hawk talk and say it's and continue to say that the rates are going to stay higher for longer, but they know they can't stay higher for longer because they know that the economy cannot perform under a long-term high interest rate environment, and that's why they issued that roadmap. And they're basically going to keep doing what they're doing until they break something, and then that's their modus operandi, right? I mean, the Fed is reactive, not proactive, right? Sure, they've been proactive in saying that they're going to cut rates, but they're always reactive when they finally do.
Yeah. Hey, and it's insult to injury. Kitco's site got hacked and they got ransomwared, I guess. And now I look at the site, I don't know where anything is anymore. Even though it was not the most attractive website, at least you knew where to look. Now it's like nothing is the same anymore.
I know, it's crazy. And all my articles, I've been writing a weekly article for Kitco for since 2016, and they're all in their database. And now all the links to all those articles are different. So I have to go on my website and basically find all the links, the correct links now that they're in the process of fixing this problem, and put them back up on my website. That's a job for another day, but I digress here. It's really interesting the way the gold price continues to hold up above $2,000 an ounce.
Yeah.
If you look at the chart, it looks very bullish. And then you look at the charts of the gold stocks in the gold sector, and you have to turn it upside down for it to look the same. Which, it creates the opportunity, which, half of me is very happy that, I've got a lot of subscribers recently that feel the same way I do. And they're accumulating stock at these really, really depressed, ridiculously low prices. But the other half of me is frustrated because, we know this is going to happen. We just don't know when. and going to happen, meaning the stock market needs to roll over for investors to basically start looking for hedges again and get back into the gold space. I mean, because you look at the volumes of especially these juniors, they're basically at I don't give a shit levels, right? I mean,
They're liquid.
Don't care about juniors.
They're like almost completely illiquid.
Yes, there's a lot of them that are. Yes, and let's face it. Most of them need to go away, and there's just too many of them. There's only so many checks that these banks can write for these projects. A lot of these companies are fooling themselves, and they're basically lifestyle companies that they're fooling themselves into thinking that a major is going to come along and buy them. Well,
fooling their investors. Fooling their investors. But
Exactly. I mean, let's face it, like 80-85% of them are lifestyle companies, and it's up to somebody. Yeah, it's up to somebody like me to pick out the best of the best and get into the best of the best at prices like this. Because let's face it, I mean, the money you're going to make in this sector, in the future, is when you're buying in times like this. I mean, you don't buy these things when they're rising; you buy them when they're sinking. And it's up to me and and your savvy investor that knows this sector to buy the right companies and hold the right companies for when that switch does get flipped,
which it inevitably will. Have you ever seen sentiment as negative and bearish and really just downright depressed as it is now?
No, in relation to a strong gold price, I haven't. No, I mean, I've seen sentiment this bad. Yes, in late 2015. Absolutely, sentiment was actually worse than this, and at the same time, projects weren't getting financed. The good projects are getting financed now, but it's the early stage exploration companies, that have marginal projects that if they do finally get a find somebody to write them a check, it's basically just money to keep the lights on, because you need at least $1 million in the bank to keep the lights on for a year.
Sure.
So it is better in that respect as far as companies are getting financed. But in late 2015, they weren't. I mean, the sector had gone down 85% in the end of 2015 from its peak in 2011. So, I mean, that basically took all the generalist investors out of the sector, and it took a lot of resource speculators out of the sector. But it's funny that in 2015 also that it's kind of similar to what's happening right now, because into the end of 2015, you had the mining sector finally start to carve out a bottom after that just brutal 3.5 year bear market, right? It started to carve out that bottom, and a lot of contrarian speculators, which you have to be one to make money in this sector,
sure,
were accumulating the quality juniors heading into the end of 2015, and of course I was one of them, and we just said to ourselves, hey, this is just an incredible opportunity. Everybody thinks the gold price is going to go below $1,000, just like they thought gold was going to go above $2,000 in 2011. Well, it never happened in 2011, and it never happened in 2015. The gold price never got below $1,000.
So true.
And the market basically had one more trick up its sleeve after the calendar turned to 2016. After that base was being created after 6 months, I think right like the middle of January, there was a day where where that bottom fell out. And all these stops were hit of these speculators accumulating these juniors. They thought, okay, here we go again. We got to short the sector, and basically we got stopped out of everything and wait for the bottom to come. Well, that very same day was an intraday reversal after stopping all these investors out, and it just turned around and never looked back.
Mm-hmm.
For 6 months, it went up like over 200%.
I remember.
Yeah, me too. Like it was yesterday. It was amazing. My account, was which I started in late 2015 with close to $500,000. It was down to like 325, 340 $1,000 at the beginning of January. Just like, oh my God, this is ridiculous. And just gotta wait because I know I bought the right companies. And all of a sudden, by the middle of 2016, it was over $1 million. So and I was able to bank 99% capital gains in 2016 after the year started off so dreadfully. So that's kind of reminiscent, I think, of what's happening right now because into the end of 2023, the gold stocks were creating a 6-month base, and now to begin 2024, they're shitting the bed again, and it looks like they're at least going to test their October lows, and we could have a sharp move or below those October lows, but that will be an incredible buying opportunity if it happens.
You think they'll test?
I think it's going to test the October low, and we're only 6% away from them right now. And there's gaps in the GDX and GDXJ where they've sold down to the tops of those daily gaps right now. So I expect those gaps to fill here probably this week, heading into the Fed meeting at the end of the month. But because if you take a look at what's happening with the miners in silver, they've been leading. They've been showing relative weakness ever since the end of January. So they're basically screaming, "Hey, this correction is the 2024 is going to start off with a correction," and that's what's happened.
All right. Well, hey, people I talk to, the people in the good companies that actually have real projects there, like you say, they are able to raise money. They have majors and they have institutions sinking money into them. And I ask kind of every mining company executive I speak with, I say, what do the institutions and the majors see that the individual and the retail market are missing?
It's like if you could say the same thing about gold, right? I mean, what do the central banks see that your average retail investor that buys ETFs doesn't see? Because that's what we're seeing, right? We're seeing central banks continue to buy gold and keeping the gold price above $2,000 while your generalist investor continues to buy wildly overvalued stocks as opposed to starting to hedge because of what's coming. I mean, if you take a look at what happened, what's kind of similarly shaping out right now is we got a huge bubble, right? I mean, everybody knows it. It's just the timing of when it's going to pop. People continue to ride it until it pops, right? So we had the same thing happen at the turn of the century, right? We had the .com bubble into 2000, and the bubble started to burst, and the Fed, the rates were high. The Fed, everybody knew the Fed was going to lower rates. They just didn't know when. And what did they do? The very first week of 2001, Alan Greenspan comes out and they announce an emergency meeting and cut 50 basis points.
I remember.
That basically ushered in the gold bull market that lasted a decade, and gold went from 250 to 1925.
I remember it well.
Me too. I mean, I didn't get in until 2003, but I was accumulating stocks from gold stocks from 2003 to 2005. I did something crazy and looking back on it, very stupid, and selling my house and putting all the proceeds into juniors. But at the time, I wasn't married. I didn't have a family. It was just me.
So you can afford to
I saw an opportunity. I'm like, this is an incredible opportunity that could change my life. And luckily for me, it was the right call, because 6 months after I did it, the gold price finally got over to that $500 level, which was basically what the $2,000 to $2,100 level is right now. 500 back then was the level that it couldn't get above, and once it did, the gold price doubled in a few years. So, and I did really, really well, and I became financially independent. I got lucky, but I put myself in the position to be lucky. I did a lot of research, I did a lot of work, and it paid off for me. And, I definitely don't condone investors do that. Don't do something like crazy like I did. But that's the opportunity I see right now, like I saw back then.
Agreed. I started buying gold, my first few ounces of it, in 1999. And I think it was $280 the ounce, and kind of never looked back. And yeah, we've had our ups and downs for sure. But hey, it's basically ninefold investment there. So with holding on to as much as I possibly could. We had taxes, divorces, weddings, and stuff like that. So at some point,
Life happens in between, right?
yeah, but that's why you have it,
Exactly.
the ultimate savings.
You hope to keep it to pass it on to your kids. You hope you don't have to use it.
Yeah. Hey, you have to use some, you got to use some, but I kept all my silver. I have a friend who thanked me because in 2009, 10, and 11, I got him to buy gold, and he bought a lot more than me. And then his business went down the tubes, and divorce, and a whole bunch of other stuff. And
He held on to that gold.
he had to sell off a portion of it,
Oh,
substantial portion.
but
But
still,
he
it was a lifeboat for him.
he said, if I hadn't listened to you, if I hadn't bought that gold, I would have never saved that much money in the bank and be able to float my way through the couple of bad years that I had.
Right.
So
Right.
the ultimate
It's a big
savings
difference of
account.
having something physical that could save you and not being able to click a button to get rid of it.
Exactly. And really important. And that's the way it worked for me too. I mean, had some a couple of rough years, but I had the metal there. I always knew I had it. I still have it. And when I had to dispose of some to pay some bills, I did. I didn't feel good about it. It was like gut-wrenching to me, David, because I knew where it was heading. But I bought it at 700 and 800, so it's still selling at a substantial profit of 100% or so. But it hurt, no question about it. So
yeah, I mean, same thing with me. I've had that rock, and fortunately for me, I've never had to sell any. And I haven't bought any in quite a while. I haven't bought any for over 10 years. I know for longer than that, I think 15 years, I haven't bought any. It just sits there, and hopefully I can pass it along to my son. But it's the silver that I bought most of, and I bought it less than $5 an ounce, and I don't even think about it. I just like that's something I hope I never have to use, and I could just pass it along to my son.
Yeah, I bought a lot of it in that $6-7 range when silver crashed after the great financial collapse. That's when I bought it. I was in there with two hands.
Nice.
The post office was bringing a hand truck into my office with bags of silver.
That's what you have to do in this sector, right? You have to buy those fishing lines and sell those rhino horns. I mean, that's especially in the stocks.
For sure. Hey, so I think now, and I think you'll agree, it's much easier to pick out those really good juniors than it's ever been before, because all the other ones are literally on care and maintenance. They're in like coma centers, right?
Yep, absolutely. And you've got all this time to do all the proper research to get into the right ones. And if you don't have the time, you can subscribe to a newsletter like mine that has basically I basically started my own mutual fund, right? I have 20 stocks, 20 juniors that I've, researched the hell out of. I have a 20 stock watch list also in case, one of them does something I don't like and I can replace it with something. And I know these management teams really, really well. Many of them have made me a lot of money in the past with previous projects. And I keep up to date with them. I go to Beaver Creek, and I go to the PDAC conference. They're 6 months apart, so I get to speak with pretty much everybody face to face that I need to speak with every 6 months. And if something happens, they're always available for me to talk to them on a Zoom meeting anytime I want. These companies are doing the right things at the right time. They're raising money at the right time. They're weathering the storm. They know they have fantastic projects. They have the access to capital. And they're just doing the right things in a really, really bad market. And in a bad market, the good projects always get financed.
Yeah, so true.
Especially these exploration companies. They really need to start merging.
Mm-hmm.
Some of them are starting to sell off some projects, but they need to start merging. We're seeing some of it, but we need to see a lot more.
Yeah, well, I like when they sell off a project, they take shares back in another company that can then consolidate that project. So they're sitting on a really nice, potential return on investment. So the optionality in these shares really increases. And,
Right.
there's a number.
Right. And the really good thing right now is you don't need to be a high net worth investor to take place in a finance to get a warrant to have huge upside, right? Because these juniors are trading at perpetual warrant prices right now.
Mm-hmm.
You don't have to deal with having to, get into a private placement, worry about having to sell them 4 months later. Or if you're a U.S. investor like me, I mean, I've pretty much stopped participating in private placement because they don't make any sense for U.S. investors anymore.
No. Especially when the Canadians don't have the hold at all now. And
right.
Just head for the exits. Yep. And then when there's a new financing, they sell the shares they had and they go into the new one and they get a warrant and,
Right. Well, U.S. investors have to deal with a draconian legend removal process, which is ridiculous.
Which is irrational and has no place in the current financial markets the way that business is transacted. It's a paper process when we're using digital markets. Makes no sense.
Exactly. Yep.
Makes no sense. At the very least, the hold should automatically dissolve. Okay. If you got to have a hold,
yes.
Then it should.
And these fees, they charge us. These fees, they continue to charge us.
Yeah.
U.S. investors have to pay so many fees. It just doesn't make any sense.
It's enough to make you want to give up your citizenship.
Move to Canada.
Well, Canada is no solution, but once you're not an American, you're not subject to 144, right?
Right. Exactly.
Only Americans get penalized. So,
right.
But we could rant and rave about
tax wherever we go. You can't escape it.
Tax on global earnings, and then they want an exit tax if you have too much money and you leave. So, But more and more people are becoming expats and renouncing their U.S. citizenship. And that should be a warning call, just like the price of gold,
Yep.
So, all right. I don't want to be a wet towel here. Bummer. I think the opportunity's there. If we don't, it would make sense that we'll see another low maybe in March, maybe in March.
Well, yeah. I mean, watch the silver and the shares. When they start to outperform gold, then it's a bottom, basically.
Yeah, good point. All right. Hey, juniorminerjunkie.com. Link is in the show notes to this interview on financialsurvivalnetwork.com. Question for David, myself, shoot me an email, kl@kerrylutz.com. And hey, sign up for a free newsletter. David, always a pleasure. Thanks for stopping by.
Thank you, Kerry. Always great to talk to you.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.